And it's sending right now. What is going on, everybody, and welcome. Welcome to another major FOMC live with yours truly, Oscar Ramos. We're so ready, everybody. We're so ready. Welcome. There it is. Checking. Volume and everything. Hey, everybody, welcome. Nice. Waiting for all the ads to pass to finally open up. Are you excited for what's to come in a few more minutes? Noe, Godsend. All right. Volume is good. Welcome, everybody. Happy to see you all. 97 people immediately. As soon as you're coming in, don't forget to smash the like button. Consider subscribing to the channel. Turn on those notification bells because you and I are going to witness maybe major price appreciation. And I want major price appreciation, guys. Today, oh man, honestly, I woke up, I opened up my account, and what I told you was you have to buy when it's bloody on the street. And it pays off. It pays off, guys, to buy when it's blood in the street. Because you wake up and PEPE is up. You wake up and Bonk is up. Bitcoin is up. Shiba Inu is up. Bread is up. We are making some good cash, everybody. So if you're excited, as you know, all FOMC meetings here with Oscar Ramos, no matter where we're at my office, outside of the office, we come and enjoy an FOMC chat. And I'm looking at all my comments right here. How is everybody doing? Welcome. Shiba Inu holders, make some noise. Make some noise, guys. Cronos fam, make some noise. Kendu, Bread, Jasmy, Bitcoin, crypto, everybody. I wake up every single day, with excitement, with happiness to bring you the latest news, guys. And I'm just, ready for whatever comes. And there's a poll right now. There's a poll. What do you think the FOMC will do? Well, that's what we're gonna be talking right now. By the fact that they do it, right? Whether it's gonna be the same 5.50 points. Whatever it is, guys, I'm just ready, everybody. I'm just ready. And I always like to enjoy side by side, guys, with you. The memes, right? 3.3, that was 3.3. That is the headline inflation. So that's really, really good. So this is what happened today. And we talked about it earlier today. So really, really happy and excited, man. It is exactly the way that I wanted to be with you guys. With PEPE, a really good positions right now. Stacks, render, some major plays that we're making some good money, guys. So soon we're gonna be looking at the video right here, where we're gonna be watching that live and enjoying and going through all the questions, going through all the answers, giving you some perspective. And man, if you bought PEPE, I told you yesterday, everybody. And it's paying off today. Let's go. Welcome. What is going on, guys? Godsend in the house. Brandon, welcome. Man, it's exciting. So you got the price of PEPE right now. We'll take a look at Shiba Inu right now for a second. Shiba Inu went to 21, fam. 21, as you're seeing right now on the screen. If you are adding to your Shiba Inu positions, everybody, then congrats to you, because you are killing it, right? If you're not adding to your Shiba Inu positions, then, well, that's fine, I guess. That's fine. So you can tell right above me it's all the Twitter news that you can tell. And core inflation definitely is coming down, guys. So that's really, really good. It makes sense, fam. It makes sense. Let's take a look at this post right here on the screen. 12-month percent change in CPI, so it's coming down. And well, oh, there it is. This was posted 4 hours ago. The goal, the major goal that I'm looking at for us is that we get a rate cut. As soon as we get a rate cut, everything turns positive. Everything turns so bullish for us, guys. If you want bullish news and green, then I think this is a great time for us, right? Eventually, we're gonna be seeing those major pumps. Even Dogecoin, actually, we're seeing right there. Did FOMC already came out? No, bro. It's gonna be in 30 more minutes. Right here, I'm on Central Time, so it's 12:30 p.m. right now. In 30 more minutes, we're gonna have the decision. But I always love to come early because we get to talk to great people, right? I believe that cut will be discussed, Marius. Yes, a federal funds rate cut. They've always discussed that since the last, probably, give or take, 4 FOMC meetings. So we've had many FOMC meetings where people have discussed the cut. So I know it's happening, guys. It's happening really, really soon, for sure. Welcome, Rob. Happy to see you guys. Welcome. What do you think will happen? What do you think will happen, right? Pause. Pretty positive we're gonna have a pause, but that's still gonna be bullish. That's still gonna be bullish, man. I'm ready for that. Yeah, of course, drop all the meme coins that you guys think are gonna be silent killers for this upcoming run. I'll be super excited, honestly, to just witness, what the market is eventually gonna do. Let's take a look at Bonk. Bonk is the one in the daily that is doing major right now. Do you guys have any Bonk? Because I don't have any Bonk, but we're seeing about a 20% pump in the last few minutes, last few hours. So that's really good. Bonk is putting itself into a great position, and I like it. So Bonk, well done. CoinMarketCap finally moved. Brett, no way, really? You're kidding. Earlier today, it wasn't like that. Let me see. Dude, you're right. That's really good. Oh, man. That's so good. That's so good. Well, I'm so happy I have my bread. I'm so happy that I own bread. So it really makes me, ahead of the game for a lot of people who are barely finding bread, So that's really, really good. What about PEPE? PEPE is building some impeccable stuff when it comes to GameFi. I'm happy to be working with the team a little bit when it comes to, some chats and knowing what's going on. So we'll keep you updated more with PEPE as soon as they give me more information. That's for sure. That's nice. So welcome, everybody. Don't forget to smash the like button and subscribe to the channel. Also, take a look at the links down below. They do support the channel. If you want to help out, that's phenomenal, guys. Now, let me see. The live is still not there yet, which is okay. There you go. We don't want that sound yet. It's a lot of sound. I'm going to mute it. This live is going to come pretty quick, pretty soon here on YouTube. So I'm going to be ready for that, FY. I'm going to be ready for that. Let's go ahead and take a look at the comments right here. Let's go. Welcome, guys. There's the FOMC. That's nice. Welcome. Just got to let the YouTube load a little bit. So that's really nice. Now, stock market stores and coal inflation report for sure. There's some other news. Russia, Moscow stock exchange officially suspend all trading in US dollars and euros. There's obviously more of that coming up, so that's why we need Bitcoin to freedom, right? Just FYI, man. That's why we do Bitcoin and crypto, period. Justin, former President Donald Trump says Bitcoin mining may be our last line of defense against CBDCs. Based on what I've heard, he said that he's the best option for Bitcoin and crypto. So things are getting, oh, there you go. Things are getting interesting when it comes to crypto, guys. So we have to be ready. We have to be put. This is going to be election year and things are going to get wild for sure. Wild things are going to be ahead. What's going on, Richard? Happy to see you, man. The tunes, we need them. Nicholas, I know, 100% we need the tunes. The problem is that it's all now copyrighted. So I gotta find some new tunes, but we'll keep it. We'll keep it like that without the tunes for a while. Then I'll find some and I'll play them for you guys. Crypto looking pretty scam lately. Well, it depends where you look, but it's actually doing really good so far. I like it. Crypto, for sure, it's not been the best, especially for some meme coins on Solana maybe, but it's, you know, buy the rumor, sell the news, and also scare money, don't make money, guys. Things are gonna get better eventually, so just stay put. Things are gonna get much better later on. I'm pretty happy about that. That's gonna be fine. Taking a look at my X account, seeing all the latest updates, for sure. It's exciting, man. All of the posts by my Crow fam about all the different tokens, Brett, With. Just to give you an idea, all of my timeline right now. You know, it is what it is, fam. New listings on Coinbase. We want, and we need PEPE, man. We need Brad. We need all of those. Michael Saylor is right there just chilling, which is pretty cool. Mary, what's going on, Mary? Happy to see you all, guys. Welcome, welcome. Welcome to Mary and the rest of the community. Happy to have you guys. Let's go. Oh, nice. Turbo is getting a new listing. I'm really happy for that. I need my Turbo to do very well, honestly. I need my Turbo to do really well. So I bought the top on Turbo, so for sure, I mean, I need it to explode. There it is, guys. It's live. So let's go ahead and put it and mute it. There it is. All right. So about 20 more minutes, we're gonna get the decision, and then after that, as you know, we get that FOMC press conference. So it should be fine, guys. There's one thing I have to change right here really quick. One thing I have to change really quick. Here you go. All right, that's better. That's better. Perfect. How's everybody doing, guys? Welcome, welcome. You know, when I don't have my office on me, I have to improvise, and I'm improvising everywhere. So there you go. You're able to see the video very clearly right now. That's really good. I'm pausing the music for a second because we're gonna get copyrighted immediately. I already learned that lesson. And we should be good to watch, you know, eventually what's gonna come in about a few more minutes, guys, with the FOMC. So, what token should we be looking at right now? Especially, you know, Shiba Inu is just kind of chilling. Let me take a look at Jasmy, guys, while we wait. Jasmy. Oh man, if you are on my Discord server, if you're one of my Patreons, I told you yesterday exactly what I did. And well, I'm just gonna tell you guys, we're very excited, very happy. It pays off to be bullish. It pays off to be buying, guys. That's what I'll tell you, honestly. Good morning, Oscar. What do you think about Monk X coin? Will you consider it as a cat coin? I'm not sure on that one, brother. Not sure on that one. What is your official page on X? What's going on, Michael? That's gonna be right here. So guys, take a look at Real Oscar Ramos 1. I'll post it right here. So you know, that's my official, that's the official page. Be very careful with all the scams, please, all the impersonators. I don't want you guys to be falling for a bad account. Please be very careful. Oscar, you need to get runes on Bitcoin blockchain. Well, I'm on dog, so I'm already getting a taste of what dog can do, on Bitcoin. So I'm pretty happy on that one. Pretty happy. Nice. So hope you guys are excited for today. Hope you guys are excited for what's happening so far in the summer. Today is June the 12th, and it happened that we got CPI data pretty steady, pretty nice, lower than expectations. So I'm excited for that. With that, in my opinion, all that the Fed is gonna say starting from today and on is gonna be bullish for crypto. They are not gonna increase, they're not gonna hike. And I know that's an answer on that poll, right? I know that's an answer, but they're not gonna hike the interest rates. They cannot do it. It's just weird. They can either pause it or cut it. And as soon as they cut it, we on. As soon as they cut it, we on, guys. Bottom line. Let's go. Chilling. Beautiful. What is going on, CC? Happy to see you. You need a BNB t-shirt. I do have a Binance one, but on this one, we're wearing the Cronos one. We're wearing the Cronos one for sure. Pause until the end of the year. It wouldn't be a bad idea if we get a pause. What's going on, Luis? Happy to see you, man. Welcome. Man, it's always exciting, to listen. We're gonna have in about 18 more minutes. I'll have a chat right here. 18 more minutes. That's what it is. I don't know why the poll is not showing on my end. Maybe because let's go ahead and do it again, because let's see. Pause. Well, you guys can see it. I don't know why I cannot see it. Who knows? Let me go ahead and refresh this one. All right, perfect. Right now it's the summer, and I mean, it doesn't seem that a lot of people are really ready to watch what's going on with the markets, but I am ready to watch what's happening with the markets, that I can tell you. Let's go to the bubbles, shall we? Banter bubbles. Let's take a look at what's going on with the banter bubbles right now, guys. All right. So in yesterday's live, I mentioned that meme coins are the ones that are exploding. As you can tell right now on the screen, if you would have invested on these 3 meme coins, let's say you forgot about PEPE, in the last year, guys, this is the year. Imagine life-changing results, immediate life-changing results. Bonk with 10,000, Wave with 57,000, Bread with 16,000. The only thing I'm happy to say is that I think Bread has still some room to go. Bread has room to go. I think every single one of them they all have room to go. Even Jasmy has 1,000%. That's crazy, That's Shiba Inu at 241%. There's definitely a need for Shiba Inu to move, because it hasn't done anything. Shiba Inu is just like chilling. I see Cardano 80% in the last year. How about BNB 170% in the last year, everybody? So we still need that punch. VSV, Gala, Cronos has almost 100%. Cronos has almost 100%. So, guys, we're lacking, you know. Now the memes in the top 100, these are the ones that are winning. Meme coins are the ones, guys, that are making a lot of people money, and I am on some of them, not on all of them. If you want to become very wealthy, you got to start on DeFi and on Dex Screener. That's why I am on this project, Kendo Inu, and I'm so far liking it, right? It went through the moon, and now it's kind of consolidating at 200 million by market cap. It's a project that Satoshi Kusama was following since the very beginning, and I'm like, why not? Let's go ahead and give it a look. And well, so far, so good. So far, so good. Cronos was worth more 4 years ago. Chris, you're not wrong. Cronos has been underperforming. However, when it comes to licenses, registration, securities, and more, it's inevitable, right? One of the reasons I'm bullish on Cronos in the long term. In the long term, right? It's just what it is. You know, the altcoin season is still not here, fam. So don't get too sad. I know it's hard to say, you know, it's easy to say, you know, just diamond handed, but another thing is to actually do it. And I know it's not that easy. So happy to see you, fam. Welcome, welcome. I think I speak for the community when I say that it's a great pleasure to be on this live with Oscar Ramos. What is going on, Alberto? Happy to see you, man. That is the community that I love. The ones that I'm with here with me. Giovanni in the house, welcome. Yeah, I know. I think a pause is going to be the one that's going to be granted to us today. It's the most evident choice that the FOMC ruling has for them. So anything other than a pause, I don't think so. Anything other than a pause, I don't think so. It has to be a pause right now, right? We're not gonna get a cut early June. Are you kidding me? That's gonna be too good. It will send us. Listen to me. It will send us if we get a cut passing 80,000 Bitcoin. I signed it right now. I signed it right now. But it's not going to happen. Later in 2024, it might. Not right now. It's too good to be true. Oh, man, that's so exciting. Turbo, shout out to Turbo. Rodney with meme coins are about to absolutely send. Really excited. What is this? Turbo listed on CoinSpot. That's nice. Let's go. The better, the more turbo, the better. There's Dog breaking. Dog is up 31% today. I'm so excited, bro. I want Dog to go up. I'm down on Turbo and Dog. I bought these two meme coins, guys, when I was in Austin, Texas, and I was like, let's go ahead and get some. But then they came down, obviously. They retraced back. So just to keep you updated that, you know, oftentimes you make some plays, they don't go the way you want, but if you're holding on spot trading, then you should be fine, right? Which, by the way, up to $30,000+, guys, USDT, once you sign up with my link on CoinW, second link down below. Check it out. You know, futures, all your 10+X for your longs, for your shorts. I got a link for you, and I got some great rewards and bonuses for you guys. Only for you, for sure. Oscar, how much money do you have in on the sideline? Well, Eric, I think you would understand that that is obviously kind of personal, right? Because we all want to be discreet with our monies. But when I say having cash on the side is precisely having some hot wallet position set aside maybe on a centralized exchange. So when you see a major flash crash, you come in and eat. You come in and eat, right? So it doesn't really matter how much it is, as long as it's something that you're willing to allocate in crypto. That's it. Have to be willing to allocate in crypto, guys. If not, then then that money is just going to fiat, going somewhere else. A lot of people, what they do is they have stable coins right now ready to act. Stables ready. So if you're one of those, then you will have some stable coins ready for sure. Crow is undervalued. What is it? Crow is undervalued and doing world-changing things. Absolutely, yes, it is. Be careful, a lot of meme coins will disappear after the bull market, like Saitama, Clifford, and other ones. Thank you, Giovanni. In reality, you know, not all meme coins are gonna survive. That's something I'll tell you right now. Not all meme coins are gonna survive. You're right. So you have to choose the ones with the best and brightest communities. That's true. So let's see. Okay, there you go. Now, welcome fam. Happy to see you all. Don't forget to smash the like button and consider subscribing. We're trying to make this work, even though I don't have the best, brightest Wi-Fi internet. So I thank you so much, guys, for being here with me. That's really, really awesome. 9 more minutes. 9 more minutes. Nine more minutes. It's exciting. Oscar, can you check out what happened to Lily Finance? Not sure about that one, brother. Not sure about that one. Right now, I don't really want to make too many changes right now on my setup right here because I already know the internet is not too stable. It is what it is, fam. But we are here still. And I'm honestly super happy personally what's going on, especially with Jasmy, as I'm showing you right now on the screen. We want to see those green candles, guys. We want to see those green candles. Dogecoin also. Oh, wow. Shout out to Dogecoin. It's really good. That is really good. That is really good, Dogecoin. That's not bad. In the 4 hours, look at that candle. I love it. The top 100 meme coins and should state so. Don't sleep on Stellar. I have no Stellar, honestly. I think if I wanted to buy Stellar, I will get XRP. But, you know, there's obviously a gazillion number of projects, guys, that are gonna give you a positive return on investment. The reason why is because we're just too early, guys. We're just too early. That's the answer. So enjoy that, man. I started watching you since you jumped in Jasmy. I just have 100,000 at 0.1. Cheers, man. No. Jasmy right now is it's been such a blessing. I'm so happy I did it. And every time I can, I go even further on Jasmy and more Jasmy. I mean, I think those Sony executives, you know, former Sony executives, they may not be making a mistake with this one, right? So I wanna make sure that I'm part of that. That's it. Internet of Things. I was reading yesterday more on Jasmy, so I'm getting even more bullish personally. Yeah, let's go ahead and take a look at some of the Cronos meme coins for a second right here. 14% of Crow with knife. What's going on, Crow fam? Look at that. Look at that. That's not bad. Is right now, I see 0767. That's not bad. That was yesterday, the 11th. And now it's coming back up. That's really good at 51 million by market cap. Let's take a look at Mary. It was 10, it's 9. So Mary's just chilling. Although we know Mary, it is the next one. Has to be the next one to get listed on CDC, right? In my opinion. Welcome, Johnny. Happy to see you, man. So yeah, guys. I'm watching, I'm bullish, I'm excited for what's to come. It used to be that Mary and Carl were here. I remember I showed you a picture, and maybe if I, oh, there it is. If I try hard enough, I can find it. Look at this. There's Carl. Carl is in the top 100 meme coins here on Banter Bubbles. Isn't that cool? So, FYI, right? It's here. Let me see if I can find Mary. If you can find Mary, let me know. But it used to be here. Very bright, very nice. But I don't see it. I only see Carl right now, which is really good. At least we have one from the Cronos ecosystem representing, guys. Fed interest rate in 5 minutes. We're gonna see the result in 5 more minutes, everybody. Are you ready for this? Are you ready for this? Oh boy. Bitcoin. Let's go to 15 minutes. Okay, there it is. There it is. I am showing you right now the price on BTC right here on the screen. Price on BTC on the screen. There it is. Nice, nice, nice. Welcome, everybody. Happy to see you all. Crow with knife doing decent. That's really good. So if that green candle changes really nicely, let's go to the 5 minutes, because that's really where things are going to start exploding here. If indeed something good happens. All right. Perfect. That is maybe the best chart that I'm looking so far. Let's go ahead and get a price label. That's 67,000. That was today at 7 a.m. Then we got CPI and it went all the way to 69,000, guys. How fast that is, right? It's pretty cool. Then the price went to 70. We went to 70,000 already today. And well, let's go ahead and see, guys. You're seeing right now on the screen my log salgo indicator. Take a look at it, guys. First link down below. 30-day risk-free completely. If you want to know when to buy, when to sell, this is the best in business. So happy I'm collaborating with them, guys, because things are going to start getting crazy very soon in about 3 more minutes, guys. Welcome. How's it going, Oscar? Crow with Knife, Marin, Ryoshi. I know, Tony. I know. I want it to happen. Ryoshi has potential. It's just a meme coin, but it's from Ibicius Bay. And Mary, one of the best teams that I've seen. And David, obviously, is stellar with all the challenges. You know, it's been able to withstand and continue. And obviously, Crow with Knife, it started everything. And so far, Crow with Knife, it's by volume leading. So I am bullish on my Crow fam. I'm lately not buying much on Cronos meme coins because I already have something and I want to stay there. I have personal choice. You guys are probably buying some of the latest ones. That's totally fine. It's up to you. It's your money. So just enjoy really what it is. Two more minutes. Don't forget to smash the like button, everybody, and consider subscribing to the channel. Today we cannot play any tunes because they will get us demonetized, copyrighted, and we don't want that. So let's just keep it simple and to the point with some beautiful FOMC choices and conversations, because I want to know really what's going on, Shiba Inu holders. Shout out to my Shiba Inu holder. Just 1 more minute, guys. It's coming. 1 more. All right. Immediately going to FOMC on Twitter. Immediately. And we're about to witness what happened. And I believe it's going to be a pause. It's coming right now. Watch everything very closely. Watch everything very closely. I'm seeing the 5-minute Bitcoin chart. And I'm seeing right now where things are gonna be heading. Has to be a pause. Has to be a pause. Oh. Wait, what? Nah. Wait. Okay, that's just early reaction. 1 p.m. is out. 1 p.m. is out. And the decision is breaking. Decided not to raise. There you go. Pause. Look at it, guys. Look at that beautiful red candle. There it is. Keep the rates the same. Guys, we have a pause. We have a pause. We have a pause. FOMC decision for the, I don't know how many times, we have a pause right now. And the decision has triggered some people to sell their Bitcoin. Rate unchanged. Everything stays the same as expected. Everything stays the same as expected. Let's go to Watch a Guru. There it is. Watch a Guru. Breaking. Federal Reserve pauses interest rate hikes, remains at 525, 550, guys. Let's go ahead and put this on our chat. There it is. Pin message. Very good. And end poll right now. Very good, guys. Very good. So with 45%, everybody, we got what we thought it was going to happen. So well done. Well done. The video's there. Look at how quickly things are moving right now. Look at how quickly things are moving right now. This is a 1 minute chart. That's for BTC, guys. BTC right now, the prices went down to 68,000 from 69,000. So $1,000 done immediately when it comes to BTC, the price. The one that obviously offers the most concrete answers when it comes to what happened to the market, the volatility. Welcome, guys. Happy to see 500 people, 600 people tuning in here with us, guys. Really excited to be delivering the news to you that we got a pause. And whatever comes to us when it comes to volatility, we'll be here till the end of that FOMC press conference. If this is your first time watching us, well, any questions you have, put it in the chat. And just enjoy the community, guys. Really happy. You know, whatever we are, we're crypto investors and we're always 24/7. Always 24/7. Sell the news every time. Absolutely. Sell the news every time. It happens. You know, it happens all the time. I absolutely agree with you, buddy. So less than 30 minutes, guys. Less than 30 minutes for us to start on this one and to enjoy what the Jerome Powell is going to talk to everybody right now. Let's go ahead and take a look at some other cryptos. Jasmy went down to PEPE. Oh, PEPE went down to as well, really fast in the 1 minute. So what you're seeing right now on the screen is PEPE, guys, and it also went down a few, you know, not much. Just the volatility, but it's all expected. Plus, this is the 1 minute candle, so you would expect that for sure. Oscar, not a bad idea to load up on the political coins before the debate. Yeah, I think a lot of people will be making some delicious money, you know, especially right now as the debate, you know, and as the election is happening, guys. Whether you are in or not in politics, you know, you can always make money. It's buy time. Federal interest rate 5.50%. Yes, sir. That's right. That's right. So let's take a look at what happened here. Nice. Let's take a look at what happened here. We're so back. Let's go ahead and refresh. It's taking a little bit X to load up. It happens. It happens. Live. There it is. We'll close X for a little bit right now. I'll put it just like this for a second. So welcome everybody. Happy to see you all. Don't forget to smash the like button and take a look at the links down below. Join the free communities on Cronos, on Shiba Inu, Telegram, guys. All there for you because I want to put a nice face-to-face party for us to celebrate once Shiba Inu gets to 100 billion market cap. Period. I think it's gonna happen, guys, and we're gonna be able to witness that together. Go ahead to Twitter right now. Take a look if X is loading up. Hopefully it is, although I don't see it right now load up, which doesn't surprise me. Well, hopefully I'm not the only one because X is not loading up. It happens. Cronos went also down. It was 10. It's almost not moving, Cronos. Almost not moving, CRO. That's pretty crazy. So let's go to Shiba Inu right here on the screen. Shiba Inu also went down a little bit, but it's kind of coming back up little by little. If everyone in Bitcoin just bought into SHIB, it could just turn their profits. Godsend. Welcome, buddy. Yeah, I mean, but people have other different meme coins, right? Other different choices, which I get it. Kevin, welcome, buddy. Happy to see you. Happy to see you, Kevin. Let me go ahead and take a look at X right here for a second. Okay, yes. X is working fine. On my end, it's just the internet. I cannot ask my internet right now the best. I'm working with what I have, you know. But based on what I'm seeing, oh, Shiba Inu, where are you at? Where are you going? Where are you going, Shiba Inu? Don't run. That direction is not the right one. That is not where I want you to go, Shiba Inu. Nice. Live right now. We're just chilling right here for about 22 more minutes, guys, and we'll have our result for the press conference, and we'll, as always, enjoy it, watch it, and see what Jerome Powell has to say to all of us, guys. That's what it is. The big winner right now is gonna be Bonk, Jasmy, Brett. I mean, they came down a lot, but they still are holding strong so far. Let me take a look at BTC for a second, because not much is changing. Only BTC, which just went down by this level, as you can tell on the screen, but that's it. I feel like Cronos isn't on this political debacle on their own page. This is bullish for the markets, right? Yes, it is. The fact that we're not imploding and selling off so bad is obviously because a pause was expected by everybody. So when the pause is expected, right now there's nothing but just wait until we get a cut, because we can continue having these CPI data that are lower than expectations, but we need for the Fed to cut, and that's just gonna be mega bullish. Now, the work here for me is to get in as much as I can with the money that I want, before the cut comes, because once the cut comes, we'll send. We'll send very nicely. Just added a limit order for 5% down Bitcoin. That's not bad. Really nice. So just chilling right now for the FOMC, which is coming pretty soon. That's what we want. That's what we expect. Take a look if X is now loading. Hopefully it is, because for some reason it just went dark on me. No, still not loading. Welcome to the internet. That happens. That always happens. Take a look at this one. Right now we have 2.54 trillion by market cap, everybody. So in the last 1 hour, we start to see some blood there, but nothing major. The same thing happened to the last time they had the FOMC. Price fell for 2 hours and then skyrocketed 100%. 100%, buddy. Every time we have an FOMC meeting, the initial response right now when we have the cuts or like the pauses, right? It's just nothing. And then after the FOMC, things start running back up again. So I'm expecting a 70,000+ BTC by the end of June. 70,000, 75,000 by the end of June. And then for the next one in July, we should be well past $78,000. Buy the news, that's true. So we should be able to watch together all of this FOMC pretty soon, fam. Thanks so much for choosing us. Whatever question you have, let me know. That's why we're here trying and, checking what's going on. The top 100 in the month, these are. So what you're seeing right now on the screen is top 100 by market cap in the last month. And I'm happy to tell you that I'm on Ondo, thanks to my man, Zach Humphreys. I'm not on Not. Are you guys on Not? Are you buying this one? Not coin? I haven't done my due diligence on that one, but that one is exploding. The last month, Not coin has been doing very well, guys. Take a look at who's not doing very well. Cronos. What's going on to our Cronos? It's a exchange token, right? It is what it is. BNB is 5% in the last month. So it's doing much better. It's performing much better. So we have some delicious deals, right? When it comes to Cronos, don't miss them. Don't miss them. Very good, bro. Wait for the cut. Sammy, welcome, man. Nice to see you. If this tiny dip scare gets you now, anxiety will be your personality. Oh, no, bro. This is a good reminder that when you see a little bit of blood, but that wasn't even anything. That was maybe like 1 or 2%. The best thing is yet to come, obviously, but we're not even close to a bear market. Much better things are ahead, guys. You gotta be prepared. Oof! You gotta be prepared for what's coming up. There you go. About 15 more minutes and things will get interesting, and I'm just so excited. Nice. Let's go ahead and take a look at the Fear and Greed Index, how it is looking today. Fear and Greed Index, everybody, 72 with now greed. So far we're in the greed, which is good news. Good news for those who are buying crypto. There you have it. Not coin. Can do. Got it. Cronos with 2x since its existence. Yeah, Cronos is just sleeping right now. Mega sleeping, honestly. I feel like Cronos. Shiba Inu following Bitcoin as usual. 100%. 100%. Did they make the right decision? Yes, they did. It's gonna be a pause. Pause. It's pinned in the comments up. Federal Reserve interest rate remains at 5.25. That's what it is. Oscar, I know you're on vacation with your family. We all appreciate your dedication and your time spending on educating us. Share your opinions, not financial advice. Of course. Thank you, Josh. To all the community who's watching and appreciating it. Thank you, guys. My wife already knows, and I already know, like, this is what we love. It's about doing what you're passionate about. And when I go out and I enjoy my vacation, I have a smile on my face because then I know that I already did what I love, and I'm just so happy, you know. Sharing all the goodness, sharing all the good news with you guys is really important for me. It's really exciting. So what will happen now? Exceptional Live. We're waiting for that press conference. Once the press conference comes, usually we have more volatility, and if we have more volatility, then that's it. We'll take a look at what's next for us. Do you think eventually when the world wakes up to crypto, they will start teaching in financial classes at schools? I feel like when the world finally wakes up to start buying, it's going to pop hard. Godsend. Well, let me tell you something. Our teachers teaching high APY savings accounts, our teachers teaching how to file your taxes, are they teaching what's the difference between a CD and a bond? Reality is not. Anything regarding financial literacy, financial education is just not what the system wants. The system wants you to be middle class, getting a job, following what's already created, and that's it. Claiming a pension, claiming your retirement. But if you're doing crypto, you are trying to get out of the system and you're trying to build your own financial freedom. That is one of the reasons that I love crypto and I love what we're building here, everybody. Because crypto is a challenge to the big suits, right? And if you understand that, then man, I love it. You continue loyal and persistent, for the good projects, looking and reading and doing your own due diligence. Believe me, you're not wasting your time buying into the top altcoins that have so much value, guys. They teach you how to be dependent from the government. Absolutely 100%. The government, they don't want smart, intelligent people that question everything and want to change, the whole financial infrastructure. They don't want that. But we do. Teachers don't teach this stuff at all 100%. They don't, guys. They don't. Thank you, Josh. Yeah, 100%. I'm so lucky for sure. Welcome to all the 600 people watching us. Happy to see you all here. In about 12 more minutes, we'll be hearing from Jerome Powell. We'll enjoy the conversation. We'll enjoy what he has to say. We'll enjoy the way that the Fed is seeing the economy right now. And at the end of the day, guys, just continue holding and buying the crypto, because I've been telling you, I had 2 lives yesterday, and yesterday night I told you the tokens I was buying. I wake up today and I see all green. You're welcome. I don't say that so you thank me. It's just that you're welcome to my ability to call the shots for my own portfolio, because it is not easy to do something when nobody is telling you. You have to make the call. You have to make a choice and send it. And that's why I say, man, it pays off. It pays off. Appreciate it, Private Gaming. Thank you so much, guys. Welcome. Oscar, as an ambassador for Cronos, do they feed you any info? Is there any near futures or US? Oh, that kind of info, not at all. The only information I know is like accelerator events and a few news that they want us to kind of share, and that's it. But nothing related to major decisions for the blockchain or no. They don't pay us. They don't pay me. They just want us to be active ambassadors sharing goodness about Cronos. That's it. And I want to keep it that way. We already discussed a couple of those, great questions in a few spaces. But Cronos, although we are in position 17 or so by TBL on DeFi Llama, I'm still bullish. I believe in my community, regardless of whatever people say. And no matter what the FUD or the trolls or whoever is against, will continue forward. Let's go ahead and take a look at Pika Moon went down. Floki went down a little bit. Take a look at Dogecoin, Jasmy. As long as Jasmy goes to 10 cents, we're sad, man. Gotta see that Jasmy to 10 cents once again, honestly. We're early for financial freedom. We are early for financial freedom. I guarantee you that. Yeah, that's true. Oscar, bro, you turned me into a vampire. Richard, you guys know that every time we see blood on the streets, we better go in and bite it. Because once you start seeing the green, everybody starts coming. So you don't want to come when it's FOMO. Because that's when it's the easiest to buy, because everybody approves. Everybody says, go buy that, buy. And you're like, oh yeah, I did it, great. But you know that when everybody's doing it, it's not really the best entry. Just got here, what's the news? Well, earlier today we got lower than expectation CPI. Today we got a pause again for the FOMC federal funds rate. And in a few more minutes, 8 more minutes, we're going to enjoy the what we always do. Jerome Powell speaking to everybody, guys. So it should be fun. It should be cool. And we got an ad here. Now, in the last week, now what you're seeing right now on the screen, guys, in the last week, check this out. Who is the only one winning? Brett. Brett is the only one winning right now. That's so cool. Thank you for taking and talking about Cronos, bro. Very uplifting. Of course, Sammy. Absolutely. Absolutely. We're real right here. We're real, everybody. 100% real. Almost there. Do you expect price pump or dump after the FOMC? Typically, the price doesn't do much. Only after like 3 to 5 hours after, after today. So later today, we could see price bumps for sure. But what I'll tell you is that regardless where the price is right now, we already had a retracement yesterday. So the best time to get in was yesterday, not today. But you can still come in today. I mean, that's not a problem. If I do daily, this is Jasmy per se. Look at this. What you're seeing right now on the screen, guys, is a price pump, and then we had a correction right here, all the way down to 33. Yesterday, I bought more. I bought cheap. Now I'm up. Let's go. Let's go. PEPE too. Yesterday we were at 4011, now 4013. Let's go. The best time to buy was yesterday, not today. That's the reality. Oscar, you have to live stream on Halloween. I know, right? Price target end 2024, 30 cents or 20 cents. For which token, my friend? For which token? When is the SNU token launching? In about a week or so from now. Please join the Telegram. They're going to tell you everything you need to know about it, please. Nice, everybody. Good. Thank you, Moto. Appreciate that. Sammy M. Hey, Sammy, I remember you, man. That's really good. I remember the great mods and the great people that come here and show some love and appreciation and great comments and great questions, for sure. For Cronos, by the end of 2024, Cronos, I hope it finally gets up and goes back up to 20 cents at least. But it can go much higher. Because what happens, guys, is that when a token eventually pumps, it does terribly nicely. So it does really well. Cronos just needs a pump, major, and it will break out all the way to the moon. But that's something that's not here yet. All right, fam. Start getting ready. Start getting ready. Because it's happening very, very, very soon. Very good. Very good. So excited for what's to come right now, that I can tell you. Nice. So we're gonna watch Jerome Powell speak for a while. A bunch of questions, a bunch of answers, and that's gonna be cool for everybody to enjoy and see where the price is heading. And I'm gonna have the 5-minute on Bitcoin, as it is the one that always changes, especially with this momentum. So right here, BTC went to 69, then to 68 with the initial release of the pause. So I want to see what's really happening, across the board. Nice. And I'm very thankful that even though I'm not at my studio, this internet is strong enough to support this live. Guys, I know we don't have the best connection, and I apologize for that, but I'm doing the best I can, fam, and I appreciate you guys stopping by for sure. So up here, you're going to see, and we're going to listen to Jerome Powell speak, and it's going to be fun. Shiba Inu price prediction. Shiba Inu has to wake up, has to be passing the 403 for sure. Has to be passing those levels. All right, almost there. If you're ready, smash the like button, guys. Consider subscribing to the channel. Turn on those notification bells. Take a look at the links down below, because things are about to get real soon right now. Seems that people want to cash out on sales, so that happens a lot. I've heard of Spell Token. Yes, I've heard of Spell Token. Yes, I've heard of that one. Connection is good enough. Love it. That's really good. Perfect. All right. We're gonna close this one, so make sure that this browser can withstand with no problem. And that's BTC. Welcome to all the 700 people. Happy to see you all, guys. And we are live. FOMC meeting with Jerome Powell speaking. Let's go. Audio's on. Audio's on. Everything should be ready. All right. So let's listen. Let's make some notes. And let's enjoy, shall we? He's coming now. Appreciate you stopping by, guys. I won't speak now.
Good afternoon. Substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really, and we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamarosa of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summer of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible. But I look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier. We want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that, and we see today's report as progress and as building confidence. But we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't. Most people don't. And I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can reflect it in one day. I think we'll you will see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
John Allen.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago, or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. Can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year, and as I mentioned earlier in the, what did we take away from this? We had really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter, and what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. You know, the economy has, you know, repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina. Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. You know, how should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's, I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were, you know, very low by recent history measures. Now, we can't really know that. That's an interesting dispute and discussion to have now, but ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and you know, there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And you know, my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having you know, the effects that we would hope for.
Well, thanks to your pal Howard Stein with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, you know, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You know, you can translate it into the language you're talking about, but to me the focus is more on, we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And you know, in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period. unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately the question is are you down to demand? And we don't know that, though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market. And your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. But so that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. Ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Chris.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and we've taken some signal from that, but. And of course, housing services, you're continuing to see high readings there. To some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really, the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably on 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene.
Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, particularly the second half of last year, and we continue to see still strong growth or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is, anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about, your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning of when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the price experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward.
Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what that you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. We remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago. And we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as they're spending or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria. Hi, Victoria Guida with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken? When I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move and to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So, and also the fact that we look at all of the whole situation. So, a decision to begin to loosen policy could have several reasons associated with it at a given time. But I would just tell we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too. So something like negative payroll numbers would be.
I'm not going to. I mean, I can think of things many things would make it on that list, but I don't think I'll butter them here.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PC readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PC as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
I don't actually have that kind of mechanical thing in my thinking. I get that, as many good ones as we had bad ones, but no, it's not like that. It's the whole, it's going to be the totality of the data. The labor market data, the growth data, in terms of inflation, you'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
Kosuke.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
So we don't, actually it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been, has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, and for our economy, what we're trying to foster is maximum employment and price stability, and we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once? You're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation.
So we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2% over time on a sustainable basis. That's kind of been our test. Or there's another test, which is an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there, and we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low, so we have the ability now to approach this question carefully, and that's what we're doing.
And just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan.
Thank you, Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing, and all the other details. We don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one thing, one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So,
but if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you'd look at we'd be looking at the aggregate numbers and asking ourselves what's going on here with inflation at the aggregate level. And of course, if any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
What is going on, everybody, and welcome. 600 plus of you. That was good. That was good. FOMC June the 12th, 2024. Checked and done. We have come every single FOMC meeting with you, fam, and really having a blast listening, understanding, and knowing what's happening in this space. And I'm here just to brief you with what occurred and just stay and remain bullish. As soon as today we heard the CPI data result, the price went up, really up. As soon as we've heard that the FOMC decided to halt the federal funds rate, the price went down a bit. But then now, as the meeting just ended, the press conference just ended, the price is kind of coming back to 69 Bitcoin. And I'm showing you on the two screens right here, prices for a lot of things, guys, that you might want to be aware of. So, guys, I'm bullish. Everybody in that room wants a cut. Everybody with a brain knows that we are well over good expectations right now with the economy because we have a strong labor market, because right now inflation is going down as a matter of CPE and CPI and major data points that they're watching. Obviously, FOMC is not only Jerome Powell, but many different people, and he's not just going to call the shots at that press conference. So I'm bullish, guys, that as the good news that we saw today, if in the next upcoming CPI, which is going to happen in July for June, if we get a core CPI data of roughly, what do you want, 3.2%, 3.3, 3.1%, everybody, that's gonna be phenomenal. And really good news when it comes to cuts can come. I'm telling you right now, to all the 700 people here watching and listening, if you are not getting ahead in crypto because you are scared, because you are paper hands, because you don't want to pay attention to anything that I say, or because you just don't, you're waiting for the rest to come, look, do whatever you want. It's your money. It's your money. But I'll tell you something vividly right now, guys. The days for crypto and Bitcoin to stay boring are coming to an end. They're coming to an end, and you better wake up to the idea that a mega super bull cycle is coming, one that is gonna make us multi-millionaires, to many people here listening to me. And well, guys, I think a few of you, right? A few of you are really gonna listen to what I'm saying right now on the screen, because we're gonna just be, enjoying the fruits of our labor when it comes to all the positions that we bought. Period. Right? Right now, they're not cut. I mean, we haven't seen cuts since forever. And when people were asking him, what do you think is going to happen when we see our first cut? Well, he knows the answer, but he's not going to say it. But he knows that all financial markets are going to react bullish and everything's going to be sent to the moon. And I don't know if you noticed what he said. But he said 25 basis point cut. He already knows he's not going to cut by 1. He already knows he's not going to cut by 75, by 50. It's going to be a 25 basis point cut. It's going to be from 5.25 to 5.5. From that, it's going to go to 5 and 5.25. So it's going to be only a 25 basis point, guys, and it's going to be phenomenal. And I'm so happy, to be a part of this with you, everybody, honestly. So, guys, to the 600 of you, thank you so much for stopping by to the Oscar Ramos YouTube channel live stream. Obviously, as always, we do FOMC meetings. Take a look at the links down below. Like and subscribe if you haven't done so. Get your log cycle indicator to know all when to buy and sell alerts, because they help a lot. A lot of people have signed up, and I want you to be the next one. There's 30-day risk-free. Don't pay anything if you don't like it, but I think a lot of people love it who will sign up. And up to $30,000 in CoinW, second link down below, if you're using futures for all your derivatives. Right now, people are shorting. Right now, people are longing. Depends which crypto you are invested in, guys. It's money that it's up for grabs. So really highly encourage you guys to take a look at it, right? So yeah, he hinted that 25%, 25 basis points. So I'm really excited. Giovanni, Rigoberto, and many of my members and moderators, subscribers, thank you so much for stopping by. Hope you enjoyed it. Hope you liked it. As always, I'm trying, guys, to bring you the latest news and updates for you. And well, there you have it. I'll see you next time, everybody. Let's go ahead and pay the bills with the ads. And I hope that you enjoyed today's session. Let me know if you have any questions in the comments down below. And I'll see you next time, everybody. I'm going to continue enjoying my vacations. As you know, I am not in the office, but I'm always ready and excited to bring you the latest crypto news. As you know me, that's Oscar Ramos. God bless you all, guys. Please be safe. Take care. Enjoy the fam. Enjoy this summer. And I'll see you next time, everybody. Peace. Let's go, guys. Absolutely. Let's go, everybody. Thank you so much for coming in. Let's go, Cronos. Let's go, Shiba Inu. Let's go, PEPE, Jasmy, and the rest. So many great tokens, guys, that we're going to be enjoying ourselves, that I'm holding, that I'm telling you. So there's my Patreon page if you want to know what I buy, what I hold, my portfolio. And I highly encourage you guys to join the free Telegram groups for Shiba Inu and for Cronos. The two of them, once we get to the objectives, I'm going to make a beautiful face-to-face party to enjoy and just to have fun and meet you guys in one place. Bye, guys. Take it easy. I'll see you next time.